which will continue for planning data collection. Without a plan how to collect data, we shouldn't start collecting any data, either from the documents which we have on our municipality or from the site. And that's the actual collecting the data, what kind of data we have to collect, what the accuracy should be. And then on the end, before the end, on step 5, we have to validate the data. If any data is inaccurate, we have to go a step back. If we are satisfied with accuracy of our data, we are now sure that we have established data register. And then it's a continuous process of updating and developing. Because Ajit was presenting it yesterday, it will be very valuable to see which of all these 7 steps in static asset management information has enhanced your knowledge about asset information system. So I back to you if you can run this Zoom poll, please. Thanks.
Yeah, wonder if you can bring up the Zoom poll just to have a check on what the participants took away as the most useful from yesterday's session. So if you can use the Zoom poll, everyone, to tell us what did you find most useful, which of these steps enhanced your knowledge about infrastructure and asset data development the most. Be great. Okay, so people found how to plan data collection and forming an effective team quite useful. I think that's the leading things. As expected, I think how to design that asset register hierarchy. We spent quite a lot of time yesterday talking through development of the hierarchy yesterday, and I'm glad that people found that useful. More or less, there's an even balance between all the topics, but the key main aspects that it seems that people took away are how to form a team, how to develop in a hierarchy, and the collection of data, selection of the data sources, and the planning phase of data collection. That's quite useful.
All these are important steps.
Yeah,
we discussed it yesterday.
Yeah.
So thank you very much. Yeah. So we have about 50% of the. So we can close now. Okay, here we are. And can we close the poll?
Yeah, the poll is closed. You can just close the window on your side.
Sorry, yeah. We'll see that today, second day outline, what we're going to discuss about it. Mohan has briefly introduced that we're going to discuss about and see how the depreciation is. We will calculate how the value of the assets, and then we'll continue into how to prioritize our critical and estimating what are the risk assets, and then on the end prioritize them, what to do first and second, and on a list for reconstruction or renewal or replacement of our assets. And then on the end of the first topic, we're gonna discuss about and see how the long-term financial plan and asset management plan towards the accrual accounting, as Mohan has indicated in his slide. That is very important to see the accrual accounting and forecasting the future. So why the asset information is needed for strategic, tactical, and operational asset management? Information is needed for decision-making process. That is very important, and is associated with each of these analytical stages in order to know the asset value. I'm repeating again. list the critical and priority assets for renewal or replacement, and to determine what assets to create or require new when we have to acquire and when we have to acquire them. Also, it's important to ensure that required performance during the asset useful life by setting out maintenance procedures and activities needed for continuing set performance. It's very important to know that is managing both decommissioning and disposal. That's why we have to know it's in this stage. It's very important. Before hoping to understand what information is needed, it's important to understand why asset information is needed. Without this, it can become a case just of information for information's sake. Information is needed to support one of more defined local government's business process. For example, on a strategic level, information will support strategic objectives, which we set in our strategic or your strategic plan, asset management plan, or strategic document. For example, measures increase municipal infrastructure level of service. All information will support also drivers of safety, enhance infrastructure performance, environmental or regulatory requirements. On a tactical level, this information will support technical policy development. For example, data information to support analysis of infrastructure renewal of roads, new medical equipment if it's needed, or potable water supply or networks, or how to define asset maintenance intervention policies. On an operational level, its information is needed to deliver the asset-related work through the efficient scheduling of resources, maintenance of assets. For example, water supply asset location data is needed to perform maintenance of works on site. So this information will be needed in operational and maintenance level for on our asset management information system. These stages and decisions within them are not isolated. Decisions will have to impact on the later phases, and it will be affected by constraints of subsequent phases. It's important that the local or national governments consider and analyze the assets' life value through their cost, risk, and benefits that will result in these decisions through the asset lives in order to maximize value from the assets. On a second topic, we'll go today about and we'll see how our municipality should ensure that how to measure success in implementation of asset management information system, but it's also in municipal development indexes and strategic sustainable development goals, which we are planning through our strategy documents in municipalities. So our municipality should ensure that appropriate data quality or so the key performance indicators are established to monitor the quality of information of asset infrastructures. And we need key performance information quality or, for example, accuracy or inaccuracy of data. We don't need that. For asset management policies to monitor and evaluate asset management action plan, its effectiveness and infrastructure sustainability. Now, we're going to go through the first topic we're going to discuss today. It's about analysis of asset information and utilizing data for strategic, tactical, and operational asset management system. We're going to see the value, critical assets, prioritizing, and financial plan. The overreaching goal of the asset management information system is to develop a framework of integrated decision support, taking into account that we have internal factors, which is those internal factors have a focus on reliable data and information for decision making, and the link between municipal departments or the public utilities internally within the organization, and also within the internal organization of our national organizations, strategic objectives or agencies. Also, we have to consider taking account external factors with the focus on the most relevant stakeholders. We have to include all the external stakeholders and users of our services. Targeted communication to stakeholders and creation of social added value is a sustainable solution. We have to be transparent in our implementation of asset management system. And also we have to take account of future developments that will focus on increased stress on our assets. For example, if we increase the level of services, what we should see what the stress on the assets will be. Adoption of new technologies, those are the future developments we have to incorporate in our replacement or reconstruction of our assets. Within the framework of asset management, asset valuation is used to calculate the current and the future asset value. It's very important, as Mohan has mentioned, about accrual accounting, which will help us for the future asset value. It's not only the past, but we have to calculate for the future asset value. This is most and the first information we need for any asset management information system analysis. We have to know the value of our assets. Whatever software tools or methodology is used, it must be based on the past values. We have to see the past value. That's why we need data from documents or from maintenance or procurement or any other document, so we can predict. We have to know the current value and future value also. In order to calculate the current value of the asset, the depreciation should be calculated first. So therefore, let's see the asset depreciation and how it's calculated. So what is the asset depreciation? Depreciation of the assets refers to the annual loss of value of infrastructure assets over time due to their physical deterioration. All the assets, they are worn out and they deteriorate over the time. Depreciation is applied to deprecable municipal assets, means the loss in services value not restored by current maintenance. Maintenance just can keep in a good condition of our assets, doesn't improve the value, or it can extend the life of our assets. The accounting or financial definition of depreciation of this term relates to the expected service life of the infrastructure assets, and depreciation may be calculated on a basis of equal loss in value for each year, as you can see on a graph on the right-hand side. For each year, which is a straight line, we call it a straight line depreciation, and it is a percentage of asset value at start of each year. That's a linear depreciation. So if we have, for example, due to time service, asset service life, and we have asset value at the beginning, we have purchase or procurement cost, and then slowly it's losing value until the salvage or residual value, as some terms are used. You can see also the second line here, which we are calling, which is called about accelerated depreciation. Our assets can lose the value very fast in the first years of each year of the asset life of the assets, and then slowly towards the end. But similar similar to line 2 as accelerated depreciation. We can see the line 3 here, which accelerates from the middle of the asset life toward the end of the salvage value of the assets. But as you can notice here at the beginning, probably we are not using at the beginning of the when we procure the asset. For example, we build a road and it's not used for first period of years, and then later on, when we build the buildings around that, we infrastructure, and then suddenly it can start losing value or depreciate very quickly. So the depreciation, we have to estimate the value by assets by calculating depreciation, and depreciation is calculated for each individual infrastructure asset type. Depreciation rate is calculated by using a book value. For example, from the previous year, or starting from the procurement cost, and then in each year we have a book value, and on the next year we will looking at the book value from the previous year, and we are calculating depreciation of the assets starting from the book value. So let's see, when we don't calculate depreciation, it's very interesting that depreciation is not calculated for constructed assets without required technical documentation and operational permits. So we don't calculate that. Depreciation is not calculated for assets operated economically in use for a long period of time, even after their useful service life. Very usually in municipalities, the assets are used even further after their useful life, and they're recorded in their books as the current investments, even with the book value of 0. These assets should be written off and either replace or reconstruct, but and the small assets, they should be written off the books. Certain intangible assets like computer software and other spare parts of the equipment, let's say membrane for the pump or other spare parts, we don't calculate depreciation on the spare parts, or like I said, the computer software. Incorrect calculation of depreciation and inability to recognize seemingly improved functions of the organization and the delay to pay the actual cost of capital maintenance until the total breakdown of infrastructure system will result in increase of accumulated expenditure. Upon the expiry of asset useful life, accumulated depreciation expenses should be used for purchase of the same or similar asset. What do you think? Ajit, can we have the next Zoom poll, please? So what do you think? Yes, go ahead.
One will bring up the Zoom poll. The question here is, upon expiry of assets useful life, accumulated depreciation should be used for the purpose of for the purchase of the same asset or similar asset. What do you think? Yeah, many people have started voting, and most think that yes, it should be used for the purchase of the same or similar asset, which is, well, I'm not going to say what's the correct answer because people are still voting. But it's interesting to see that there's emerging a balance between the two views, that some people think that it should not be used, whereas many think that it should be used. If you don't mind, Vlado, I can tell people that yes, the correct answer is that the should be used.
It's true.
The answer is true, that you should be looking at the depreciation cost as being set aside for purchasing the same or similar assets. And Vlad, just to highlight that this is actually
most of the participants agree with you. Yes.
Yeah.
It's
And
around
this
16%.
I'm just wanted to highlight also that this has actually kicked off a big discussion on chat as well. So it's triggered a lot of people's thoughts on what depreciation actually means, and what kind of assets we should be thinking about in terms of which type of depreciation, whether it's the lines 1, 2, or 3. And I know that you're going to cover a lot of
We're
that
going
in
to
the next
cover
slide.
about the accrual little bit later. Yes, it's accrual account depreciation straight line, and we'll see what infrastructure types should be, what methods should be used for different types of infrastructure. But those who answer this expiry that we should use depreciation, accumulated depreciation for purchasing the same or similar assets. It's true, I must say, because the depreciation is part of the tariff or tax structure. So whenever the bills or taxes we are sending for our end customers, for users of our services, those are the revenues in our, but that's incorporated in the tariff. So depreciation actually we are using as a revenue. So as a revenue, probably, not probably, but therefore it's recommendable that accumulated depreciation should be used for purchase of the same or similar asset. That's why, but not 100%. Definitely about 50, more than 50 or 60% of accumulated depreciation, it's recommendable to be used for procurement or construction or rehabilitation of the assets, because it's part of the revenue of the municipality or the public utilities. Depreciation is the process of allocating the cost of tangible assets over the period of time, rather than calculating the cost or as an expense in the year of acquisition. Generally, at the end of the infrastructure asset service life, the sum of the amounts charged of depreciation for each accounting period will be equal to original cost. So the sum we are charging it, we are receiving it through our tariffs or bills which municipalities are sending. So while calculation depreciation is important, let's see the next slide. We can see that municipal public utilities estimates the revenue requirements to meet financial and infrastructure service obligations. Municipalities and public utilities are financially sustainable if they have sufficient funds to meet its financial or service provision obligations in the future. The definition of the future can in practice be taken for a period for which sufficient revenues are required through the estimates of tariff settings. I won't go in detail how the tariffs are set, but the basic principle applied in the determination of the local government required revenues dictates that the required revenues should be equal to the cost of efficient service provision at acceptable level of and service quality. Based on this definition, required revenues of municipalities or public utilities includes operating cost, capital cost, and taxes. The revenues are set of certain tariff period, which are setting about tariffs of between 5 and 10 years. Depreciation expense is in the revenue requirement, which is part of the, let's say, tariff, represents the capital recovery of investment. So if you invest in, for example, if you build the road through your through the revenues or through the bills, you're receiving revenues for new capital recovery investment used in providing of customer service. Depreciation is very important because it's part of municipal or annual revenues through the tariffs and taxes, as I said before. For example, on average, depreciation costs for the water utilities at public utilities are estimated around 30%. It's very similar like the other service provisions for roads, bridges, or let's say sewer systems and things like that. Depreciation, which is included into tariff system, it's about 30%, and it's annual revenues. And from that, we are having annual revenue on the municipalities. It implies that the price tariff structure covering the depreciation cost should be at least 30%. If it's each 10% of unrealistically calculated depreciation affects the water tariff, which means by 3%, for example, from 10, which means that the tariff water should be increased by 3% to meet performance standard by the utility of the service delivery. When we increase the tariffs and the bills, when the customer will see the bills increased, could lower the customer willingness to pay. They won't pay it for services, and that will result of the low collection rate, low utility revenues. So we can see here how it will. We can start with a wrong, for example, or low level of. Let me switch on the laser in front of it. Low level of depreciation, it will go into unrealistic financial forecast, as Mohan says that he would like to see more accrual accounting system incorporated for future planning. If we have an unrealistic future forecast, then we'll go to setting the low tariff settings, which means our unrealistic lower revenues and underestimated investments for capital. These capex and opex are capital expenditure and operational expenditure. So if we go to underestimated investments in capital and operational expenditures, then it will go through infrastructure that it will go in the deterioration of our infrastructure assets, and then as impact from that, it will have a low quality of services, and then we will have a low collection rate. So if we have a low collection rate, we will have a low revenues and financial problems, and that will result in chronic insolvencies, and staff will start living, and which are very important for our service provision. And then infrastructure assets completely could deteriorate. Like you can see here on the picture, when the crisis will start, when the pipe will. This is the picture taken from Belgrade 10 years ago. And when the pipe burst during the night and when full of water there, all the traffic there, it was blocked for several days. Okay, now everybody would like to know how the, oops, I don't know what's going on.
I think there's a slight lag between when you change the slide and what we see.
Yeah.
So a lot of people are excited about hearing about what depreciation method to use for different assets, which is what your next slide is going to show. Yep, there you go.
For accounting or financial reports purposes, there are 5 common methods. I'm mentioning again, I'm pointing out that for accounting and reporting purposes, there are 5 common methods to calculate depreciation. First one is called straight line. And as you can see in the graph here, it's straight line depreciation is the easiest method to calculate. It's simple to divide the asset basis or the procurement cost, which we have, by useful service life to find in the annual depreciation. For example, if we procured some assets which is cost $100,000 and estimated service life of 50 years, we simply divide 100,000 by 50, which is 2,000, and every year we depreciate the value of our assets by 2,000, and that's why we have equal depreciation throughout the years. And this is the formula how it's calculated. it's asset cost minus residual value. Maybe on the end of the asset service life, they will be estimated that our assets will have a value of a certain percentage. So, and divided by that, we will have the equal parts of depreciation. For this accounting,
there's a question there. How do we estimate the residual value of an asset? Is it as simple as thinking about if we are going to sell the asset at the end of its life, how much are we
yes,
going to get? Yeah.
yes. Not only that, but for example, the road of, let's say, 100,000, it can be a zero value because we have purchased the land and we have built something. So there is a value. So how do we estimate that? Surely about the condition on the end, but we know there is about minimum 10, let's say, of our computers probably after 10 years, it's a zero value. Of the road, probably it's there's, how do we estimate? That's probably by the land. Or for example, the roads, the asphalt paving, it's not value, but the land is value. There is a value of the land. So that's the residual or residual value of our assets. So application where we can use the straight line is called as roads, bridges, water supply networks or wastewater networks. Next three of the road, second, third, and three, we call it, those are accelerated types of accounting depreciation methods. The first one is diminishing balance, which is related to the previous one, which calculates under the diminishing or declining balance method. You would take the book value of the assets, multiply it by the straight line depreciation. That's why they are related, and the rate multiply the amount of desired depreciation rate, and it can go up to, let's say, 200%, which will go to the, let's say, for the next one, they are very similar. So the diminishing or declining balance we can find in the literature is a straight line depreciation rate multiplied by book value of the beginning of the accounting year and multiplied by the percentage. Usually it's 20% or 40% for the double declining balance. For declining balance applications we can use, they lose the value in the beginning of the useful life of the years very quickly. And it's like, for example, it can be used for the trucks, ambulances, medical equipment like, let's say, respirators, especially in this period of COVID, when we use heavily the new equipment at the beginning of the year, and it's losing a value because it's used all the time, periodically. And also the X-ray equipment. That's why we put here the X-ray medical equipment. It's very for accounting purposes. I'm mentioning again, it's the best, this method, double declining balance. For double declining balances for the assets, they use value very quickly, like computers, laptop, desktop computers, and mobile phones. So as you can see, if you compare these two, double declining balance is let's say, it's losing value, double the value than the previous method. The third, let's say, accelerated depreciation method, it's called sum of the years. How it's calculated? It's calculated asset cost, original cost, by years of estimated before remaining beginning of year by sum of your digits. For every year, for example, if you have the first year, it's 1 divided by sum of your digits. How do we calculate sum of your depreciation digits? It's n plus n squared plus n. N is service life. For example, if we have 10 years of the service life of our asset. 10 squared, it's 100 plus 10 is 110. Divided by 2, it's 55. The sum of your depreciation of digits is 55. That's how we'll calculate. And on the end, it's sum of the production units. Usually, I will recommend not using the straight line for, let's say, infrastructure, long infrastructure as a straight line. But if we can use it, it's more appropriate to be used this method, sum of the years of digits. And the other one, for example, if we have equipment, where other four methods of depreciation, use of time, and to estimate how much value of the asset has lost, the units of production depreciation method takes into account the amount of activity of the assets actually experiences. For example, to see how many kilometers per year our truck has passed the last year, and then we multiply that. For example, if we know that our truck can for 10 period of time can go, let's say, 200,000 kilometers, and for the first year 20,000 kilometers, then we divide that and we multiply by the unit production rate. So there are many advantages and disadvantages of this, and there are, for example, advantages for the straight line. It's very simple to use, and it's very simple to calculate, but it's not, doesn't give you the real value of the asset. For all this, you don't have to know the let's say the formula by heart, but that's why we have estimated. We have produced Excel. Again, I can't.
In the meanwhile, while you're trying to bring that up, Vlado, there are again a lot of discussion about this. One of the questions is also can you have negative? So it's actually, I'm turning the question around to you. Can we have negative residual value at the end of the life if you have to actually pay in order to dispose the asset properly?
No, no, actually. Depreciation can be negative, actually, can go up to zero. But usually, as I said before, assets are used even after the service life has expired, let's say on the end and after. So most of the municipalities they're using and notifying that it's zero value, but they are noting as a future investments. That's why they're keeping the let's say those assets in the book, and even if the value is booked, so there is no negative depreciation on the assets.
Yeah.
Okay. So I will go back to before we go to valuation of the natural assets. I can show you later the Excel templates. I don't know, there's something wrong with my computer.
Yeah, we can probably take that up at the end. But there's again lots of interest in understanding what is the value of natural assets, land, the forest, and so on.
The question I have asked for them about. Does the land depreciate? What do you think, Ajay?
No, so there are land. So two types of land, right? So one is freehold land, which does not depreciate, whereas there is land that you have because you want to mine for certain resources, and that will depreciate as the amount of metal or whatever it is in the land gets depleted as you mine the metal, its value will depreciate. So that's my take on it.
Yeah, and the time when we start building, let's say, a recreational sport facility or something, then you can, because you're using, when you calculate the value for the in preparation and construction, the value must be calculated for the land, which is the market value of the land, and then together with the construction and the value of the asset, and altogether the sum uh, of the asset, then it starts depreciating. And indirectly, the land depreciates. But Mohan asked a very important question about, does the natural asset, what's the value of them? How do we calculate? Do they depreciate? No. What do you think, Ajit?
No, so Cyrus, yeah, it's a very interesting question about value of especially important assets like the Mount Everest and so on. So you can either take a very limited view on the value of the Mount Everest by saying, okay,
Priceless.
yeah, it is priceless, but if you really want to put a value on it, you can actually say, okay, the government gets so much millions of rupees or dollars in terms of revenue from tourism, or people who want to pay for climbing the Everest and so on. That's a very limited view. But then if you think about the value of the mountain for the country, the profile of the country, it puts Nepal on the map and so on. So then it's priceless. So you don't try and value such natural assets. However, it's important to remember the value of that asset when it comes to maintaining that natural asset. So to really understand, if you make the mountain dirty, if you don't clean it up properly after all these mountaineers go up and down the mountain, then its value can come down in terms of the image of the country and so on. So it does have a value that needs to be protected, but there's no point in putting a number for that value.
Yes. Also, I have to add here that we have to ask ourselves, in protecting these economical, let's say, opportunities for development of the tourism and our economy in the country, we have to think about what infrastructure is needed actually for protecting these priceless, like Mount Everest and the other lakes which we have. So we should think about what infrastructure is needed, environmental infrastructure, roads also, for protecting this, let's say, priceless natural values which we have around us. So here, I finally have opened the Excel table, which is a tool that you can have it if you. We can email to you all the templates which are produced during this development of the presentation. So this is, for example, the Excel for calculating the straight line, and here it's only the input data which you can put for the asset type, purchase cost, depreciation, year, acquisition, and residual value. For example, if we have a building which is cost $20,000, it automatically calculates it, and it's built in 2008. Starting from 2008, for the depreciation years of 20 each year, it will give you the book value, depreciation rate, and opening book value of the next year, and also in red the current value. If we change any of these, let's say, input parameters, you don't have to calculate. It will give you also the graphics, and you can see the straight line, how it's 2,267 it's minus, and for example, even we can change the year. Here is an input, and it's automatically, or depreciation year, let's say 15 years, and this is it. It's the same applies for the other methods. Here we have them separate. So here we have the input. You can input the data, let's say type of asset, asset cost, depreciation of years, so you don't have to calculate by hand, or you don't have to know the formula by heart. But here it is. That's why the Excel is for. So you can combine, modify these templates to suit your use. And on the end, so which is about some of the production units. For example, here you can put the input here, and yearly inputs, for example, for the wind farms, let's say 300 million, and depreciation years of 25, and let's say 15. It's automatically calculating, but you should also put every year how much the unit have been used for this let's say asset tag, and then automatically it will calculate the current year and that year until, and also remaining units of the asset. So we'll this is the Excel which I promised you that I will show. You can send the email request, and we can send it to you, all the templates you need it. Let's go back to the PowerPoint slides. We saw the natural assets. Maybe if somebody can, if they have a different opinion about how to calculate the natural assets, what's the value, let's say, if he knows the value of Everest, then let's discuss about it. The next slide, it's, I think we are Ajit near to the first break. We need it, me and you, definitely, and also the participants. So we can have a first virtual break, coffee break of 5 minutes.
Yeah, I think it's a good time to have a break. Similar to yesterday, we'll be putting you into breakout rooms. You can take this opportunity to stretch your legs, walk away for a bit, get a coffee, or introduce yourself to your fellow participants in the breakout rooms. As an icebreaker question, we have got this: if you could speak another language, what would it be? This is just a suggested icebreaker question. You can actually even put your answer on the Zoom chat as well, so we can all hear about that. Right, so we will see you in 5 minutes.
Welcome back, everybody, from the coffee break sessions. I hope that you had a great conversation and discussion about another language that you would be in another. Yeah. So let's continue. Very important part. We've discussed about how to calculate the depreciation, what types of accounting depreciation methods are there for calculating the asset book value. So welcome to plenary. We move on to asset valuation and see the other methods for asset valuation and calculation of the value of the assets. There are commonly used accounting standards. There is commonly used accounting standard called Government Accounting Standard Board Statement 34 or GASB 34 was adopted in 1999 at the same time that accounting bodies around the world increased their emphasis upon the public sector capital accounting. The guidelines of these accounting standards, however, specified asset valuation calculations that reduce the relevance to infrastructure asset management. They are not really relevant. This standard is not really relevant for infrastructure asset management. This standard requires agency to value the assets only based upon their original construction cost, known as their historic cost. So asset valuation is crucial for decision makers to be aware of the real or so-called fair value, as it's called in Australia and the UK, of the assets, and also the remaining value of the infrastructure assets. Why asset valuation is important? It's important that your local or national authorities are not, if they are not able to forecast the future cost of the maintenance of the assets, they will not be able to react properly, and what activities, further activities are needed for maintenance to any future predictable or non-predictable events. So most of the local governments here usually keep the value of their assets in their books with data such as acquisition or procurement value, the invoices or whatever, or the final payment when the construction is done. So we know the value, depreciated value, and the net book value. That's in the accounting system. Very important thing is that net book value does not represent the real value of the asset. It's only for the accounting purposes. It's the method which is calculated by accountants or financial statement, and this is requirement for the municipal or all the companies to present the financial statements, accounting to the regulatory bodies. So sorry. Yeah, we have a problem with the computer.
We can see a slide, Vlado.
Yeah, okay, yeah, but the other one is okay, no problem. We said that it's important. Why it's important to calculate the value? To determine the real value, remaining value of the infrastructure, not the past, not today, or today also the current, but also for the remaining future value of the infrastructure assets. It's important to assist the management to more effectively maintain the assets in the future, and for decision making in case of the sale or disposal. That's why we need to estimate the value. If infrastructure assets are in particular in the civil engineering type of infrastructure, such as roads, railways, water supply, sewage network, stormwater drainage systems, and things like that, that are operated by our municipalities or public utilities or on national agencies. And assets require for modification to the asset management evaluation process. It is assumed that for local or government authorities, asset valuation should be derived on a basis on ongoing concern, and continuous process, which is economic value of infrastructure, should be calculated. There are three basic methods or commonly used methods for calculation the asset value. So the first one we saw, which is historical, we call it is historical cost method. And the second one most used is the replacement cost method. And the one which is used very often for the railway infrastructure in canal, it's called net salvage value. So these are we saw the first one, which is historical. Now we're going to continue with replacement cost. So which valuation method should we use? We saw that the historical, that there are two, and replacement cost, there are two commonly used methods. One is for accounting system, and the replacement cost is commonly used for, let's say, asset management. Both of these methods are backward in looking, and they rely on the historical cost for reconstruction and rehabilitation and maintenance of assets. The only difference is that historical use the original procurement cost, and replacement cost method is using current replacement asset cost, which is quite different. It's not the same. For example, imagine if you have a bridge constructed 50 years ago, and the cost of it was, let's say, $500,000. That's how the historical method is used, and we saw these five methods before, how they calculated. We used the original cost, or maybe some intermediate for replacement. But replacement cost method is using current replacement estimated cost, which could be very easily today, after 50 years, normally it could be doubled very easily, 1.1 million or maybe more. So this is a starting point how we calculate the value of the value. So which depreciation method should we use? Let's see the pros and cons for each. Most of these two methods used in practice in asset management. For example, advantages of book value or historical cost is commonly used for financial accounting purposes. I'm repeating this again and again, but it's only for accounting purposes. Historical use and it's relatively simple, and it's in accordance to the accounting standards, which I mentioned before, GASP 34. Disadvantages of this does not account for charges and prices, neglect the usages, condition of the assets, that doesn't count for it. It's only the calculates the value, neglects the technology and service standards. Advantages of replacement costs commonly used in public utilities for underground services, which are providing services like water distribution, roads, sanitary. So on the roads, we don't know the actually underground, the bedding of the road. So that's why it's commonly used by public utilities for providing these various public infrastructure services. It is quite straightforward to calculate, and we'll see on the next slide how to calculate it. It's a very simple formula, and it's called, first it's a depreciated replacement cost, DRC, which is equal by remaining service life of the assets, RSL, and divided by estimated service or expected service life of the assets. That multiplied by current replacement cost. Depreciated replacement cost current value of an asset is the current value of the asset based on its current replacement cost minus allowance that captures the deterioration in value of the assets today. The most difficult thing is to calculate this part, actually current replacement cost. So it's calculated by its estimate of the current cost by replacing the asset, by replacing or renewal. The formula is a unit rate of the asset multiplied by the modifier and multiply that number of units. For example, if we have, let's say, if we want to replace ambulance, for example, then we should use the unit rate. We should estimate the market value of the new ambulance, and then multiply by a modifier. Modifier, it's actually one in this formula, but if we want to renew or reconstruct some asset, this can vary between for certain. It's not zero. It's not one. Sorry, only for replacing the assets, the modifier is one. Yeah. And for the others, for renewal or reconstruction, that can vary. And if you ask me, that depends on regarding the circumstances and condition of each asset for renewal. So that's why it can be changed, reflect the cost of the impact of the local conditions. And
so Vlado, just to clarify that, the modifier, if you're just replacing an asset with a like-for-like asset, then it's one. But if you're replacing it with a slightly improved specification and so on, and if you can't really estimate the market price,
then it can go above one.
1.1, 1.2, you estimate
whatever.
that, right?
Yeah. That's experience. Yes. meters. So, and multiply it by units. For example, the roads, the units can be, let's say, square meters, or let's say, we know the unit rate, let's say $50 per square meter of the asphalt in the road together. Or the linear meters, let's say 100 meters of road is about 180 to $100,000, especially in southern part of Europe. And that can be multiplied by these meters or kilometers we want to replace or to renew. And as Ajit says, this modifier can go above 1 or below 1. So on the next slide, we're going to have, again, a Mentimeter, zoom pole. So for example, that we have the asset which with expected service life of 25 years. And we are currently at year 20, and the remaining service life is 25. And estimated current replacement cost of an asset is 1.5 million. The question is, how do we calculate the current value of the asset? Please note that we should use the formula. You should use the formula. And if the other thing
if
is
people can first take a look at the formula before jumping in and pressing a button, that would be great. I think this is a very straightforward calculation that you can make.
As I said, it's very difficult to estimate current replacement cost.
Yeah.
Which we have 16% votes till now. 18 is jumping now.
And I think there's an even balance between 350,000 and 300,000. I think if people take a close look at the formula, you'll come up with the right answer.
Yeah, take the calculator. It's very simple.
Yeah.
As I said, it's very straightforward mathematical formula, but the most difficult thing is to estimate the current replacement cost of the asset, which will further explain the methods of estimating the asset replacement cost or renewal cost.
Yeah, I think more the bar graphs are not changing. I think most people have provided their answer, and most people think that it's 300,000, and that's correct.
That's correct. Yes. 5 divided by 25, it's 0.2. Multiplied by 1.5 million. That's exactly 300. But probably the participants look at let's say, those small graphs which we have, and they will try to get the value from there. So it's inaccurate. Yeah. Anyway, thank you very much for voting and using the formula. So as we saw, it's very important and it's very simple formula. But estimating, as I said, asset current cost, that's the most difficult part. So in order to calculate the asset value, the most important task is to, I'm repeating again, the current asset cost. There are 4 methods. Market price. We have market price, current repair or renewal cost, or if you want to replace, and then we have to estimate replacement cost. On the end, recoverable amount or disposal value. For each 3 of them, remember, it's simply not using estimating the market, let's say, price of the truck or the bus. We have to also include the planning costs, which we are using, procurement cost, and VAT costs. And also for the renewal cost or repair cost, we need planning, design, adding on not only the pipes, let's say the cost of the pipes to renew the part of but we have to include the planning cost, design, construction, supervision, VAT. For replacement cost, it's also the same, but here probably if we are extending the road, let's say, making it wider, probably we need to procure or we call it, we have to procure the land actually to buy from the private properties if it's not government property. Or even if it's government land, then we have to estimate the cost, market cost of the land. So this is also should be included in estimating the cost of the assets for replacement. So in this in repair or renewal cost or a replacement cost, we should always think about build back better principle towards the resilient asset infrastructure. So we have to add something that we don't want to build the same as it was before, but we would like to add value and make it better than it was before towards the resilience of the infrastructure. So on the end, there is a recoverable or amount estimation or disposal value. We use it. It applies for the assets which are not in use. This estimates the current cost of by reference to the net present value of the future cash flow expected from the sale of the asset. But we don't use it, and we ask ourselves: are we going to sell it, or it's we're gonna put in the book value zero? But it's always to see the net present value and see if there is a market, competitive market exists, then we can recover the costs. Usually it's used for the some buildings, excuse me, not used in the municipality. For example, we build a new building, office building for the municipal building, and then the old one, if there is a market for it competitive, so we can recover our costs and depending on the net present value. There is another thing about what about divesting of there is not in the list. Divesting of our assets. For example, in southern part of Europe, there are many army barracks, for example, when restructured the armies after the, let's say, breakout of Yugoslavia. So most of the army barracks are left empty. So the government didn't need it, and but they were paying the operational costs, electricity, safeguarding, and maintenance, some maintenance costs, which they don't use it. So they offer it to municipalities, different municipalities, divest it to them for, let's say, economic development, which can be used for local economic development, building, let's say, opening the hubs for, let's say, training centers and things like that, which municipality needed very much so. So next slide, we're going to see revaluation. We saw valuation, but everybody's still asking now, what's about why revaluation? What is it? Why to revaluate when we once valuated? Why to revaluate again? A revaluation of fixed asset is an action is required to accurately describe the true value, as I said before. When the Australian they define it as a fair value. Currently we have the value, but experienced, let's say, experts in they can revalue it and give us the fair value of the assets. The infrastructure assets on municipality that owns and operates. This should be distinguished from the plain depreciation, where the recorded decline in value of an asset is tied to its age. The revaluation model means that the asset is carried out at a revaluated amount, being its very accurate value, and the date of revaluation less subsequent depreciation and impairment. When we revaluate our assets, it's providing that the assets accurate, it's very accurate and it has a fair value, and it's based on revaluation is done based on a condition, asset performance, and value of the assets that can be measured reliably. Once we revaluate the assets, it's carried out as a revaluated amount, and that is the true value, and then we can put it in our database. Usually in the countries, they do revaluation every year. when this practice of evaluation and revaluation actually of evaluation is done every year. Once municipality should establish efficient asset management system that can be performed routinely each year. However, the process for evaluation would not be as complex as before due to the accurate asset database, register, and asset classification. But when should we perform this evaluation? It's the recommendation by the auditors, which they audit our asset management system. It's about 3 to 5 years we should reevaluate who should perform this revaluation. It's not the same team probably. If you have experts in our municipality, they should, let's say, every third or fifth year, they should do the revaluation, how it has been done. According to international accounting standards, evaluation or revaluation, or they will require the land and the real estate is done by certified appraisers or court experts, witnesses, respectively. In the process of evaluation of municipal infrastructure assets, property, plants, equipment, there is no standard applied. So there is no, let's say, certified evaluation or valuation experts. It should be performed by the, for example, maybe conducted by any competent team of professionals familiar with the assets, with long experience. And maybe they can be within a municipal function of the environment from the maintenance department or finance or engineering department. So usually the evaluators, they go on site, check all the books, maintenance books, financial books, and everything for for the very important assets, critical assets, let's say, which are used quite often. So, and they provide report, how they have estimated, and what's the true value of the asset. I will give you the sample about the revelation example, how it's been done. For example, for the one pump station, which is constructed in 2010, let's say, with a construction value of 120 in that time, residual, an estimated residual value of 10,000. It's only the building, let's say. The other here, when you ask me about how do we estimate residual value, only the building after, let's say, 25 years, it can have a value. Otherwise, pumps and electrical conduits and other equipment, it doesn't have any value. So let's say this year, the accountants and used by straight line method, they have estimated that the remaining service life is 14 years, and the value of it, when calculated, I'd say the value by depreciation using the straight line is 57,200, and on the same year, our, let's say, asset management team, they went on site, checked some books and other data which they have. They have reduced estimated service life of 40%, they say, instead of 14 years, because of the condition, now the remaining service life is 10. And when we calculated that with the straight line method, counting the same accounting method, it's 55,810. But when the experts will come now, and usually they check everything, all the documentation, and quite often they can either reduce or increase the estimated service life and project what's the remaining service life of the assets. And they, on this case, for example, they have reduced for 10% further, and let's say 8 years remaining service life, which is 338,400. Now you can see notice from the graph. Come again? Sorry.
Carry on. I think someone just unmuted themselves.
Okay, sorry. Okay. Now you can see from the graph there were quite differences between 38,000 and 57,000, which was used by let's say accounting method. But first thing, if we don't reevaluate for a long period of time, let's say 10 years, like in this graph, we're going to have a huge differences, and that will impact on our tariffs and our revenues, and they will be smaller, and so we can't estimate it, right? So as you remember, that spiral inefficiency will start. So that's why it's recommendable that revaluation should be done every 3 to 5 years. So you can notice the differences of accumulated depreciation, not enough funds for, probably it will not have another thing, will not have a funds for reconstruction or renewal. So one of the most challenging areas beside this evaluation of the valuation involves decision on which form of the current renewal or replacement valuation should be used. Should we renew or replace our asset? Both methods are essential for effective asset management of the assets. However, it's important for each local government to ensure that we know, understand the purpose of each valuation. So in general, renewal should be used for effective, or this method, valuation method for renewal should be used for effective asset management and decision making in relation to the current cost of our existing asset. So we should see the current cost of it should be used for to determine the appropriate maintenance and renewal strategies and activities to maintain the existing asset at appropriate level of service. So when we want to renew something, we have to think about how can we improve our maintenance and other strategies. And also to determine the true depreciation of our existing assets. So use this method. The same like replacement valuation is used to determine the relationship of our existing asset to the standard of asset which is they will replace it. Also, for the future replacement, major renewal programs for the setting out appropriate depreciation levels and future standards of assets is required. It's very important what the standard, or let's say it's required of our future asset to be replaced is required. For example, or demand. It's very important. We're going to replace the asset if the demand of our customers are high. For example, if we have a five meter road and the traffic toward the earth it's increased twice, then we have to replace that with modern and two-way road and then a one-way road. So this is the replacement, and we have to calculate it. What is the replacement cost of the new, wider, and modern road? So as on the slide, the similar situation is we have the road, which is in existing road, for example, in use for 20 years, and now it's the time, let's say, expected service life of 25 years, and at year 20, like we have the estimation before, at year 20, what we should do? Shall we rehabilitate the road, which means either we're gonna change the let's say rehabilitate the asphalt pavement on top or with the same width of the road, which could cost about from the graph here about 900,000. And with the expected service life, we're going to extend for the next 15 years of the current road instead of 5. We're changing the asphalt on top of it. We could go for another 15 years. Second option, it could be to renew the existing road as it was before with the same standards, let's say the same depth of the base course and um, the same width and everything, and subgrade the same. We just change everything new, but the same dimension, the same characteristic. And we estimate the current cost for complete reconstruction, which means replacing everything or reconstruction, everything, but with the same material. Could be, we have estimated 1.5 million, let's say, as it was before. You know, the previous exercise. But the advantage is that we can further extend the service of 25 years. And as the demand will ask for us for new replacement of the road, and for further, let's say, that will be cost about 2.8 million with estimated service life of 40 years. So we gain more years, but we pay more. We should think about probably we will need to because we can't recover all the costs we have to now to borrow money or to have the loans from the government or from the other financial institutions. So we have to think about that, and the key factor of, if we can see, the key factor is money, depreciation, future depreciation, let's say service life, extended service life, we can see. So all these parameters are very valuable to think about which option should we go. But the most important key factor of all these three options, it's not only those three, depreciated value, financial cost, expected service life, but it's appropriate depreciation. But in fact, the money needs to be spent in each of these options for the life cycle. With that money, what level of service which is required by the customers we will get. For example, if we pay, for example, a replacement cost, what we will get in service, are we going to improve the service? So that's why additional cost, we call it cost benefit analysis, as valuable information. It should be performed for the final decision of these three options. So I would like to ask you again, if Ajit could help me. If we can open the Mentimeter.
I was actually thinking, based on the timing, if you can just go through the answers, and we could probably also skip the breakout as well. We're running around half an hour late. Yeah.
Okay.
So in the meanwhile, people, you can send your answers, and Vlado, if you can just quickly capture what the answer should be, then that will be great.
There is no answer, actually. As I said, it's before. All of them, depends on, as I said, cost-benefit analysis. But if the demand, then let's say it's huge demand, I will go for replacement. Because the 5-meter road, even if we pay more, we have more, let's say, remaining estimated service life to be extended for another 40 years. And plus, we're going to have demands in the future which will provide us better quality of service.
So I suppose then what you're saying is it's not purely a cost-based decision. It's about what value the road brings to the community
and benefits
the benefits to the community.
Correct.
And it's so right. Okay,
definitely.
Great. Thank you.
Yes.
Thank you.
So, shall we go for the challenges and prioritization before we go to?
Let's do skip the breakout and move ahead. Yeah. Thank you.
We're going to go about the next step. When we know the value, we know how to calculate depreciation and the replacement cost and renewal and the options how to do it. But before that, and we have to prioritize the critical asset and to know what is the most and the best way of maintenance infrastructure. All these assets is the most difficult task for each local and national government, especially having in mind that required requirements for the operation and maintenance cost reduction. So during the time, actually, they are increased, but reduction is imposed by the municipal managers. They always tell us on one side to demand to decrease because we have to save money for the future because we have a low income um, or revenues, especially in the case of the mayors. Uh, but on the other side, we have a customer demands to reduce the tariff, so there is a balance. So that's why we have to be uh, very careful about what assets are critical and to replace them or to reconstruct them or to continue with or what actions are needed for continuing the maintenance. Therefore, using the data to determine the most urgent actions is the best way. The key business questions to local governments that implement a good management practice are what type of maintenance, control we have, renovation, replacement, which I am always uh, repeating myself, but those are the most most questions we have to ask. How to determine the best combination of costs, risks associated with the costs and the replacement and performances of asset in relation to interventions that should be undertaken, that should be taken in the future. Does it pay off the spent funds? Like Ajit says, what's the cost benefits on performance improvement and risk reduction on the same time? So the next step in analysis journey is to assess the critical assets. Those are the three, let's say, steps in prioritizing critical assets. First is condition assessments. We received the report from the experts about the condition of our assets. Based on these statements, for example, estimated 80% of estimated service life, which is uh, it's uh, it's used and it's in good condition, and we rate it in four in a level of 5. We put the rate 4. The next step is we ask ourselves, so we get a report about maintenance reports and operational cost, and we estimate what is the probability of assets to fail. For example, if there is a good condition of the assets, like in step 1, yeah, then the estimated service life consumed is 20, and it has a major performance deficiency, it's unlikely to fail. So it's very low, let's say, low probability of failure. Uh, in any case, we have to think about redundancy as means if the in the opposite way, if the pump, for example, or any asset, um, are there any spare assets? For example, on the pump station, usually there are two pumps installed in the pump stations. One is working, and the other one is spare one. In the case of one it fails, the other one starts to pump the water into the system. The same like in the hospitals, we have to have a, let's say, a diesel generators, for example, in case of the collapse or failure of the electrical power. So that's why it's for example, if we determine the criticality of electrical installation, we have to see if there is a diesel generator, and then we rate everything, and then we estimate what's the consequences if the asset fails. So we rate it, and there are 4 categories to determine the consequences of fail. For example, health to public, uh, let's say, and safety in case of fail. There could be very high health or maybe even debts, that's very high, then we can rate not 0, but let's say 10 or 12. And there could be financial losses as a consequences, and operation and maintenance, and environmental impact. So those 4, and probably 5th about our, let's say, performance of our services will be. But those are the 4 ratings which will see the consequences of our, and then we just multiply, let's say, probability of failure rating 2 by 4, which is 8, which means this asset is important, which means we don't need for replacement or reconstruction, which is very important. And then we continue with the maintenance, so we recommend what type of maintenance will be for the future. As we go to the next slide about risk. We saw the critical assets. Now let's see about business risks to local governments. It's usually defined as a major and minor uncertainty in relation to anticipated outcome of business activity of a local or national organization. By terminology of ISO 31000, it's effect of uncertainty on objectives of how to perform the or leverage of the expected results. Excuse me. And asset levels of service and asset threats risk have been allocated into 3 general categories. Let's say we have to see the condition of the asset, what is the physical state of the asset, listed we should rate about what's the condition of the asset, physical performance, which is based on also on the condition, but also on the maintenance history, and adequacy to operate and function safety. What is their performance? We see the from the technical aspects, from the maintenance assets, how it has been designed. From the technical aspects, are they performed as they were designed, and what standard are they? And the third is exposure to hazards, natural or man-made causes. So all these general categories we have to be seen, to be evaluated or analyzed for the risks. Yeah. Risk assessment. It can never be fully eliminated. It only can be managed, because the risk could be managed and mitigated. We have to assess determine for each asset category, asset life, how old is the asset, what is the condition through the regular inspections and reporting, and asset performance through maintenance history, as I said before, and failure of history, if there are any failure from the recent past or recent months or last year or this year, and how likely it is to fail now or in the near future. But also, are there any backup, as I said, the spare part, things like that. What are the consequences and cost of repair of loss of organization revenue to meet what are the consequences? Risk management requires expertise of input. It can be done by strategic insights from municipal council. Let's say senior leadership. We need it from the strategic insights from financial departments, tactical from financial accountants, the books, infrastructure, use planning, engineering. We need a very important information or data, and operations. And how to prioritize infrastructure means identification of critical plus risk assets to enable the decision makers to local and national government organization to bring the decision on the basis of reliable information, whether to decide on minor interventions or major interventions in a certain, if the risk is higher, we need a bigger or interventions to the asset type or asset category. Therefore, the purpose of infrastructure assets prioritization is to plan and use the when we plan and use the budget for the maintenance, renovation. That's why we have to predict the cost for reducing the risks. The level, you can see the relationship between the level of service and risk. At the beginning, we have a higher level of services, and risk is exposure we have a lower risks. During the years, because the maintenance costs they rise, and our assets they deteriorate, and level of services are lower, but the risks are higher. So the risk exposure is higher. And contrary, at the beginning of the year, we have lower level of services, lower level of services, but higher risk, so increased risk probability. So the question is, when we're gonna, let's say, renovate or replace the assets? So it's when the total impact of risk is the minimum. So the optimum of the replacement or the mitigating the risk is about not exactly at the minimum level, but just before. That's a better impact of the when mitigating the risk exposure. How do we calculate the risk? It's our business risk exposure, which is the running cost of risks. Just a multiplication of the full failure of consequences, costs associated with it, and failure of probability. So that's the formula. How do we calculate the risk? The same like we estimate, is it a high or risk? So everything is related to the costs. So let's see the inputs from the customer's environment as a consequences to health, national and national environment. Those are all the consequences which we can have it from organizational financial operations. And this is the risk metrics, and we put from scale from 1 to 5. And condition and degradation, it's likelihood or probability of failure, somebody is saying, or failures of as a consequences of condition and degradation. And when consequences of asset are concerned, they usually imply certain cost related to the asset failure, cost of repair, cost of collateral damage, cost of negative environmental consequences. So all these costs should be calculated and estimated there. And during the process of adequate asset failure, it's also simple method rating from 1 to 5. For example, if 1 to 5 or 1 to 5 there. So we have asset condition degradation and maintenance and operations. Those are all these factors which we have to think about when we have asset metrics. Once we have in this area, when we multiply estimation of consequence and likelihood, we can see where is the asset on high risk or medium risk or low risk in this green area, yellow or red. So we see what is the criticality of the assets and what is the risk ratings. Depends on them. We send in priorities of the assets. For this on high risks, we have to renew or replace. Plus, what we have to how much money we have to allocate for the mitigating the risk. The same applies for the area, for example, the assets we rated in this moderated with moderated risk, or let's say even the low risk, and how to maintain the future, because those are the very valuable assets. When we have these priorities and we decided the cost for renewal or replacement and how to maintain in the future, we also have to consider how to design and construct the assets, as I said before, implementing Build Back Better principle. And also, we have to estimate how much cost it will be for, let's say, excuse me, for designing renewal or replacement, plus construction, plus supervision. So all these are cost related, and we have to put them in our calculations to mitigate the risks. And we should think about all these parameters. We should think about how we can achieve our sustainability of our assets or resilience of our assets that will improve the customers' let's say services, environment, organization, our organization financial operations. We will reduce totally, let's say, not totally the failures, but we can manage the failures and inspection and mitigate the future disasters if it happens. There are options, many options, how to fix and strategies, how to mitigate and strategies how to treat or reduce risks, as we see. Accept it as it is, which is doing nothing, and shouldn't be the option. Especially if it's in moderate area or even a high area, accepting it's not the option. Maybe if it's in let's say very low, we can just say we accept the very low risk, but we should continue with the maintenance, and how much it will cost. Everything we have to provide the future cost for maintenance or replacement. Avoid it. It's usually not realistic. Maybe probably because we have set the objectives very high. When we think about that, that will, let's say, probably it will burst for the next period of time. Then we put the indicators very high. Then it's not really realistic what we said, and then we can avoid it. Or we can ensure if the flooding or during the intensive rains, how the asset will, let's say, especially roads or water supply assets will perform. The other is to transfer it to, let's say, by insurance, by insuring our assets. So in this revenue or tariffs, it's insurance. We should put insurance. We have to insure every asset in case of any failure. So transferring those risks, we should think about how much money we have to spend for insurance or mitigate it. The other strategy is how to mitigate or reduce the risk by increased maintenance. And on the end, the elimination is simply by a replacement of the asset and make it better and more resilient. So we go to the next coffee break of 5 minutes. Ajit, we've spoke a lot today.
Yes, indeed. So let's take a break. Just wanted to reiterate the points that Vlado mentioned. What the idea here is to focus on risk when we are making decisions, not purely based on condition, for example. So understanding the risk is really critical. And the last point that Vlado mentioned, it's okay to accept risks, but need to actually think about how to mitigate those risks as well. Don't just forget about that risk when you're accepting it.
And provide money for it. I mean, costs, how much it will cost, which will be needed for the future financial plans, which we want to discuss.
So let's take a 5-minute break, and definitely. Again, we'll be putting you into breakout rooms if you want to have a quick chat with your colleagues. There's an icebreaker question there you can answer on the Zoom chat or discuss with your colleagues. what are your favorite and least favorite things about virtual meetings, since we are having a virtual meeting, that we can take away as feedback for us as well. So have a good break.
Welcome back, everybody. So there is a message, hi Claire. Thanks. Let's start again. Continue. Now we saw how to calculate depreciation, so the value of the assets, how to calculate the value, how to calculate what's the purpose of revaluation. Based on that, to estimate the critical and risky asset, prioritize them. What is the cost related to mitigate the risks for example, for the high risk assets or critical assets, to estimate the costs, how to mitigate, replace the cost for by replacement, renewal, and also operation for future operation and maintenance cost. And now we come to having all these costs related, replacement cost, let's say critical costs for critical assets for replacement and maintenance costs and everything. We have to plan for future long-term planning for the asset management plan. Local governments in almost all developing countries, financial planning is often limited to an annual budget and using cash accounting. Mohan was insisting, instead of in some countries in Asia, instead of using a cash accounting, to use accrual accounting, which is leading to, financial long-term planning. Requirements for financial sustainability of the local governments undertaken in all developing countries in recent years consistently identified the shortfall uh, forward financial planning horizon of many local governments as a key factor for implementing on financially sustainable decision making. Um, Inquiries emphasized in the particular importance of long-term financial planning for local governments that are responsible for managing and generating service, especially from long-lived assets. Those are, for example, roads and water supplies infrastructure, um, that have a major impact on municipal revenues, annual revenues, from the major assets like road infrastructure, water supply, natural, let's say, infrastructure um, for preserving the infrastructure. Those are the main assets that we have. The municipality depends on those long-lived assets or long expect with service life, and those are the major impact and have on municipal annual revenue. So that's why we have to pay attention on them. A long-term financial planning together with use of accrual accounting rather than, as I said before, and Mohan emphasized this many times, rather accrual accounting rather than cash accounting for reporting and decision making, and better asset management, which is recommended as a crucial for local government financial sustainability. Uh, Analysis and development of asset man- oops, sorry, of analysis and development of asset management financial plan and capital investment plan can minimize asset life cycle cost and determine level of service for any determined level of service. It can also provide critical expenditure projections as inputs on operation and maintenance costs for the long-term asset management and capital investment plan, especially for need capital expenses for critical assets. Um, those critical assets usually in these financial plans as a short-term plan. Those are for the first 1 to 5 years. So we have to plan for the funds for critical and risky assets, which we analyze as we shall see before. in previous slides, those comes first in the first period of first to fifth year of our financial plans. And the other, let's say, renewal or replacement costs or disposal of municipal infrastructure, they should be forecasted for the next 5 to 10 or maybe 20 years. Usually the financial plans are developed for the period for the next 5. This is a short-term planning, 10 and up to 20 years. Asset management managers and asset management team members are not financial experts, not an I, but I know a little bit of it. So probably an Agitos and most of it. And I'm not financial experts, but one of their tasks is to develop asset management plan. So our duty and our obligation is to provide asset management plan for all capital and operation and maintenance requirements. Based on these plans, it's a valuable information for future decision makings by the mayor and financial managers. So they are providing feedback to us as asset managers. And this feedback information is about what is feasible to achieve and further plan of capital investment plan should be finally developed. So there is a we should distinguish about asset management plan and asset investment plan. Asset management plan is what we should do. So we should inform the key decision makers what we should do and how much it will cost during the next period of time. And as a feedback, we receive what we can afford by the mayors or financial managers, and then we tune up both plans, and we have a final plan for the next 10 futures. So the most difficult question is how are we going to estimate when?
Vlado, there's a question. The answer is possibly yes. Is the capital investment plan part of the asset management plan?
Good question. First, as I said, it's what we should do. That's the plan. That should be also provided into asset management plan. But on the end, as I said, as a result, as also an investment plan, capital investment plan of what the municipality can do. Actually, a real picture of the investment plan. Yes. So both plans should be there in the asset management plan.
Thank you.
So in order to predict the cost and timing for future infrastructure expenditures for replacement or renewal, there are several methods. Most of them, there are two actually. Replace or renew the assets on the end of the service life. Most of the municipalities, they wait or they predict. I've seen so many plans. They don't use any other methods, and they calculate just what is the remaining service life, and on the end, they estimate what is the current replacement or renewal cost. At that point, let's say, if we have, let's say, for the remaining cost of our road ends up in the 7th year, that's starting from today, from 2021. Let's say in 2028, when it's end, then we put the value or expenses for replacement or water supply. The other one, which is it is used but very effectively, it's optimization of the cost and benefits and risk exposure. That's the other one shown in the slide. It's evaluating what to do, when, and why we have to do it. So as it's shown on this so it's taking in account with the blue line there is a operational and maintenance cost. With the time they increased. They increase because the service level of service drops, and we have to increased and maintains. How to calculate it? We calculated, we know today the current operation and maintenance cost, and then we multiply using the formula for present or future value. Present value is equal to future value divided by 1 plus I and I on power on n of the years. I on this formula, it's discount rate. So we have to project discounted rates either on operational maintenance cost or depreciation of our assets in the future, starting from the current year, starting from this year. So future value of the discounted replacement cost, which is the discounted replacement cost in each year, multiplied by this formula for the future value. And we said, what is discount rate? Discount rate is the interest rate which the national banks, the national central banks, reserve banks, lends to commercial banks to meet their liquidity needs. So every country, they have information about what's the discount rate of the country, so you can calculate future. So if you have depreciation, future depreciation of the value, actually the value of our asset, and projected, let's say, present value of the future operation and maintenance cost, similar like we have analyzed the risks, it's the minimum value. That's the most optimal period for replacement or putting the expenses in that year between 2025, like in this chart, and 2027. Before that, I mean, let's say for the next period of 2 years, it's too early. It's still early, but let's say, and we don't have to invest because we are over investing there. After that, this period is late, but and it's too late after that because we're going to spend a lot of money for maintenance cost, and then the spiral will start working. The inefficiency of spiral inefficiency will start working. That's why this method is quite good for you to estimate when to invest. So as I said, in the first 5 years, we have probably the or critical and risky asset for the first, second, and third year. But we also have on this graph is shown how the operation and maintenance costs will go forecasted through the next 10 years. This year is for the replacement or renewal of the assets which are expiring the service life in the period between 5th and 10th year. We can really notice that they are very high. So the asset managers, they should notice these peaks here, and they should bring back together and say, this is something wrong, we have to go back. They shouldn't be that high related to the first year. They should be really relatively equal, like it's shown in before. The purpose of long-term financial plan is to express in financial terms what activities that municipality proposes to undertake over the medium or longer term to achieve the stated objectives. It is similar, but usually less than the detailed and annual budget. So we have, for example, what is the cost for renewal and replacement, and what can, let's say, but for the next period of 10 years, internally generated funds. So what that depends on the revenues which we have in our municipality, and during the period when we have bigger requirements for, let's say, renewal or replacement, then we need additional borrowings. You can see in that period of time. But on some years here, you can see that there's a municipality with effective management, asset management, can generate the cash, which can start repaying the loans in this period of times. even in that period of 9th and 10th year, you can see even the next year it's going, it can be able to repay the loans from the, let's say, year 7 and 8. But it's also critical here, the borrowings are very high. It's almost the same as internal generated budget. So that's why good asset managers and financial managers can work on those two plans, what we can, or what we should do, or what we can. So we can see later how we can manage this with the critical performance indicators. So, for example, as you can see here, a lot of borrowings we needed for this period. So infrastructure needs in the world exceeds the resources that countries can hope to raise financially responsibilities, macroeconomically sustainable way. So that is reported by International Monetary Fund from last year. It's about 15 trillion gap between the global need and projected infrastructure investment up to 2040. So there is a huge amount of money needed in the world, especially in the United States and America and developing countries also, even United States. The 15 trillion gap between what is needed and what is projected globally. So borrowings are never substitute for income or inflow, but it's only for replacement. So there is a big demand for the infrastructure. For evaluation and monitoring purposes of our asset management information system, key performance indicators are valuable information. So we have to have them for reporting asset management sustainability. That will enable you to measure and report the effectiveness of our asset management plan against the targets and outcomes annually. And we have to report that to our decision makers, mayors, probably even line ministries in central government. Sometimes they will require the reporting about our municipal development index, or how we are improving our infrastructure towards the sustainable development goals. And let's see the key performance indicators. For example, in this graph, in this picture, you can see here that data, which is very important, valuable data, they provide information in three levels for decision making in asset management plans. And these indicators, we measure the progress of it, and it's needed for the asset management plans, also for the strategic considerations, for the cash projections, capital growth, and capital renewal, operational maintenance. So we need it here. But also for the delivery of these plans, we need the indicators to measure our implementation of plans. And the plans are done not only to be put on the drawer and forget about it. We should follow it and track what we have planned, and maybe some changes with them. So these indicators are very important. With these indicators, it's important to have well-defined information in maintenance, organizational issues, renew or replace options. We need this information to the right people, for example, from asset management plans and engineers to financial experts, but also for the stakeholders and the decision making for this, to present information to senior decision makers in consistent manner. Let's see now what are the composite indicators. They are infrastructure systems. They have an impact on achieving up to 90% and even more of all strategic development goals targets. So infrastructure depends on the infrastructure. It can be, let's say, transport, water supply, healthcare infrastructure, educational infrastructure. I'm talking about infrastructure for all these systems, even social infrastructure, cinemas and things like that, on the parks and things. So all this amusement infrastructure, it has an impact of let's say more than 90% on achieving sustainable development goals. So one of the indicators which we can measure our municipal development is called a composite indicator. So they are used for assessing the progress of the municipalities, not only municipalities, but also on the countries over time. So as you can see here, there are a lot of indicators that can measure sub-pillars, for example, on the cultural institutions budget, educational budget, secondary school, primary school, so which is infrastructure, educational infrastructure, environment. So indicators can be defined like, let's say, what are our own resources? What is the money per population in our municipality? So what is the budget, or what is the revenue of the services that we are providing per capita of per population? How can we self-financing? What is the improvement of our self-financing? What is the capacity of our municipality to sustain from the own revenues, which is also can be measured by let's say dollars per population in municipal budget. Those are financial indicators. It can be also, let's say, waste treatment plant municipal coverage by population, public transport coverage, percentage of the total roads, which is very important indicator. The other indicators, these composite indicators, can be, let's say, educational budget or low air quality days per year, especially here in Europe or India. We know that how many days per year we have, and which indicates the environment. Natural parks are a percentage of the total area, and let's say, as Mohan has requested to discuss about the national, let's say, parks and which we have in our municipality or country. So those are the indicators, and how we preserve them, not what's the value of them, it's how to preserve them. More of these composite indicators, because they have different indicators, so it's very difficult to measure. And there is a method which, it will take me more than one day to explain, and because they are very different in their composition, we should use the very different weighted factors in order to measure them all. So those are important. But the important thing is how do we define these indicators, composite indicators, which will measure our development. It's indicator, like we said, we have to provide the name of the indicator, let's say roads paved, percentage of total roads. Indicator definition, which is we clearly defined or what is the definition, what is the output result from the activities, if it's positive or negative, it's going up or down. Towards the year, or when we measure. Indicator gives information about the existence of the infrastructure which we measure, and allows the local government strategically to work on the future projects. How we should describe the method of measurements, how the calculation is made. Everything is in calculation. Nothing is. So we can see even in today's presentation. So method of measurement, how it's calculated. For example, for the roads pavement, it's based on roads paved divided by total length of roads, and has resulted in how we improve in them. Do we have paved roads in the next years? Do we plan for the next years, and how we're going to achieve them? And what is the data source? How are we going to measure it? Where are we going to find a source of data to measure all these indicators? We should say from statistical office probably, or from our database, asset database, which we have, either from the municipal governments and republic, or republic enterprises for the state roads in this case. And also we have to indicate when do we have to update this every year or every second year, or but not more than 3 years each indicator. So we should track our improvement of our infrastructure towards sustainable infrastructure every single year. We have to see all these indicators. So the next, Ajit, how are we time? Can we go to the next slide or the
Yeah, so what we were doing a bit of a background discussion about this. So what we are suggesting is that we don't do the breakout, but then use this time or part of the time that Mohan has got an idea to generate a discussion around country-specific issues.
Okay.
So I suggest just hand over to Mohan for a quick discussion. Mohan,
Great.
if you're on.
Yeah, thank you, Ajit. Yeah, while we are going through this very complex, sometimes we feel complex if we are not very academically sound, the calculations, methods, techniques, and a lot of philosophies through in Vladimir's session. Let's also have some, country experience. Let's to save time. Let's have only two, two participants chance to speak after you raise hand, and then other participants through chat, so that we can get the idea what your government agency or local government or municipalities is doing in regard to this asset data management and all about like depreciation, the valuation, revaluation, accrual accounting, and all those. So if you have very good experience, please share it. Two participants will get chance to speak, so just to save time, and then others will do in chat box. Thank you. Please raise your hand and speak. Your government agencies, local government or municipality involving in valuation, depreciation, all these things.
And financial plan.
Nobody's raising their hands, then perhaps Mohan, if you can highlight what's happening in Nepal according to your knowledge.
Yeah. Okay. Okay. Let me proceed with Nepal example. Okay, there is one hand raised. Is also from Nepal, it seems. So let him speak. Sri Ramji.
Namaste.
Please go ahead.
Hello, am I audible?
Yes, go ahead, please.
Okay, Namaste. I'm Sri Ram Bakal from Nepal. I'm transportation engineer by profession. I used to work in strengthening the National Rural Transport Program. That was to improve the rural road in Nepal. That was implemented by local development ministry, actually. And I have the experience that there is a practice of road asset management within this topic, but there is no practice of the asset valuation and record keeping in that way. only the inventory of the road asset, and based on that inventories and the condition assessment, the intervention plans was being prepared that time. I don't think other agencies like Department of Road or specifically I'm from road transport sector, so I'm focusing in that area. So there is no specific asset valuation practice in Nepal so far.
Thank you, Sri Ramji. Yeah, I have also experienced same thing in Nepal. There may be practice in particular projects, maybe run by ADB, World Bank, or big donors, operation and maintenance plan, but it is not linked with the mainstream accounting system and the government system. So I mean, we really feel the need of policy thing. So I have seen another hand raised, Ronita. So I mean, since we are giving two chances to two, so this should be the last, I think. Ronita, over to you.
Thank you. Currently, for Ministry of Economy for Fiji, the government has implemented the National Asset Management Exercise, and currently we have implementation of the National Asset Management Framework for whole of the government. So currently we are developing an asset management framework for all the ministries. And we are liaising with all the ministries on the asset management strategies and the plans, and on how to go ahead with the exercise. Thank you.
Thank you, Ronita. It's very good. I think that's the experience we need to learn from Fiji. Maybe we'll get more information from you through email, and I would like to share your experience through email to all the participants. That would be useful because of the time limit. Now we'll listen to other participants in the chat box only, and due to time limit, let's move ahead. Over to you, Vlado.
Thank you.
Thank you.
Thanks, Mohan. Let me switch on the. Okay. Now, when we saw the, let's say, the other assets for, indicators for measuring municipal development, indexes, and sustainable development goals, how we measure them. We also have key performance indicators how to measure our asset management plan, especially the financial plan. So there are three major key indicators for measuring our asset management financial plan or capital plan. So these ratios are based on the Institute of Public Works Engineering in Australia. And these ratios are outlined in Australia Infrastructure Financial Management Guidelines from 2009. So these are three: asset consumption ratio, asset renewal funding ratio, and asset sustainability ratio. This first one highlights the capital investment required for future to preserve asset service life. This is the ratio between the sum of the depreciation replacement cost, DRC, which we saw that formula of assets, divided by sum of the current replacement cost of depreciable assets. So that ratio in Australia, or this regulation, it says that it should be between 50% and 75%. If it's 50%, it shows that it's what we plan. In the near future, we're going to have a rapid deterioration of the assets. So, or if it's above the 75, the local government or the central government, maybe it's over investing in a renewal or replacement of the asset system. As I said, this is for Australia. Maybe this ratio between 50 and 75 can be altered in each country, in developing countries. So but it gives us the idea about how should we measure the indicator for our asset management information plan, investment plan. Sorry. The second one is asset sustainability ratio. It gives us some of the capital expenditure for replacement or renewal, and some of the depreciation expenses. As you can see here, like I started from the beginning, depreciation and calculation of depreciation, especially with this method of DRC or depreciated replacement cost is very important. So it measures, for example, how much capital expenditure for replacement will cover the depreciation expenses. Here is the first question which I ask: how we can use the accumulated, let's say, sorry, depreciation for new or replacement or renewal of the assets. So this is for example, if as much as we have money, some of the depreciation of the expenses, or either from our own revenues or from the borrowings. So the ratio should be between 90 and 100, let's say 110, which is acceptable ratio, which covers, let's say, 90% of the requirements for the replacement or renewal of the assets. Everything about it, even above the 100%. In Australia, 110 is acceptable. So probably, but I will say in developing country, between 80 or 95%, this should be quite a good ratio for sustainable ratio. So the third one and the last one, which if we have these previous two setting it right in these tolerances, then definitely the last one, asset renewal funding ratio, which indicates your local government has a financial capacity to fund projected asset renewals or replacement. It has own capacity. And that means that if we have the other two right, then this one it will also be in between 90 and 100%. So it's calculated from net present value of the planned capital investment, which means projected, let's say, cash flow and value of the projected cash flow today, divided by net present value of the required capital for investments. So this also planned capital and required, as I said, what we can do and what we should do. It should be in the ratio between 19 and 100%. So we are nearing the end of our presentations, and as I said before in the beginning, we have provided and developed several tools, Excel tools, how to calculate depreciation in accounting terms. Also, we have developed the Excel tools for valuation and compare the valuation with the valuation of, let's say, for replacement cost, that method with the historical cost method. And also we have developed Excel for, let's say, a risk assessment and risk management. And on the end, these financial planning, so all these slides and the graphs are used by this Excel and financial planning. So if you request it, we can send it to email to you all this. You can use them, alter them, modify them to suit your needs. So on the end, I would like to thank you for your attention, staying online for a long day yesterday and today. It was my privilege being with you all, and thank you very much. And thanks, Ajit, for this great job and other crew members behind the scene. So last message to you, and probably Asset will give you the homework, which you can see from the slide there. what is the homework to be done in relation to the asset management plan. And thank you. And last message is stay healthy and get back to Ajit for the final words. Thank you.
Yeah, thanks a lot, Vlado, for this wonderful presentation. It was very detailed, and I'm sure all the participants took a lot from this session. There's a lot of technical detail that you covered there. I'm very aware that a lot of people have been asking a lot of questions, and we are not able to answer all the questions that we have because of time constraints and so on. But at least what you've done, Vlado, is to get people to think along the right direction and ask those right questions, and that's the most important thing. I just wanted to say one thing, that if you have any further questions, please get in touch with us through your regional consultants and so on, and we will try to answer as many questions as we can and as possible. With regard to the homework exercise that you need to do for this session, I'm sure Claire and others will get in touch with you and send you the details of the homework that is required. So I'll now hand over back to Warner for a final message from Daniel to wrap up this part of the workshop. So again, thanks a lot, Vlado, and everyone else behind the scenes.
Pleasure. No, thank you, Ajit.
First, I'd like to thank our instructors, Dr. Ajit Kumar Parlikat, Vladimir Grotstev, for doing fantastic work yesterday and today to drive home the point how important data is for infrastructure asset management, how important it is to capture it, utilize it, and interpret it in the right way in order to make the right decisions. As I said yesterday, we're at the midpoint of our online solutions dialogues. We'll meet one more time to discuss measures to make asset management more crisis resilient, especially in the light of natural disasters, but also changes like climate change and health emergencies like we've just been through with COVID-19. As I said yesterday as well, all of you that will have participated in all 3 rounds of the workshop and that will have done the homework and the assignments will receive a certificate. And with that certificate, you can apply for further technical assistance in the field from UNDESA, from UNEPS, and from UNCDF. And you can also apply to the Municipal Investment Fund of UNCDF, which rewards investable projects with seed funds. I hope you had a good time. Thank you once again for being so engaged, for making this a lively and interactive experience. And I look forward to seeing you again in a few weeks. Thank you. And thanks to everyone involved for making this a successful and highly engaging experience. I had fun, and I hope you did too. Thank you, and goodbye.
Just to reiterate, thanks a lot from my side and Vlado's side as well for listening to us for such a long time over the last 2 days. Have a good rest of the day.
Thank you.
Goodbye.
Bye. Thanks, Ajit. Thanks, Mohan. Thanks, everyone.
Thank you. Goodbye.
Bye-bye.